Okay, we have the SPOOs just holding steady just above 2100. As I said, with the UK bank holiday, it's definitely thin. We started early in the European session. We started out with the dollar on a little bit of a bid. With the euro just above 12, it looked like a great area to go in and step in and sell them. But I had to do a little bit of computer work and restart everything. And by the time I came back, we were already coming right back down the tubes. And you can just see how thin it is because the market hasn't been reacting very well on very much two-sided trade. But let's go on and jump in here into the SPOOs. Just a moment. Okay, let's go on and come in here with the SPOOs at the 4 hours and be 1 moment. Okay, we had a real nice return off of that 2070 area, and it's probably going to be, although last week was a little bit different. There's no doubt about that, but I think it's been almost 4 out of the last 5 weeks has been put new money to work Monday action, and I would kind of anticipate the same thing. Although once again with the UK bank holiday, there's no doubt it's pretty thin out there, and action has not been very great at all. We do have, I just want to go and note, we have, at least for the cable, we've got a option expiring on the New York cut at 10 a.m. at 51.20. Cable's currently at 51.18, and it's for 1.3 billion, and also another $1.5 billion at 150 even. So just want to make you all aware of that. And good morning, Walter. We'll get into that. Like I said, we're going to try and, because I'm going to have to be covering for Blake through Thursday on the morning edge, so it's going to be a long day. So I think we're going to try and look at a couple of different things to see how best to go on and kind of maintain a format. So we really won't be touching anything in FX at all in this first hour. I just want to make a couple of notes. If I see something happening, I know the euro's on its lows, so we are coming into a key level on the 30-minute chart. Actually, also on the 2-hour chart, which is 11:15, and also 11:05 is a 38% retracement of that move from 8:05 to 12:91. So we'll go and stay cognizant of those. But like I said, in order to avoid redundancy, I'm going to go and try and keep it just to the SPOOs, crude and gold. During this first hour, we'll look at a couple other things. So here we are on the SPOOs. Like I said, we had fantastic rebound. I just find it hard that anybody's going to want to fight this once again on a Monday. This has been it's been the narrative overall. If you think about it, just go put in this trend line real quick. For I think it's 4 out of the last 5 Mondays has been put new money to work day, and even though last week was a little bit different, we had concerns and thoughts what it might be initially, but or right after the open. But once again, I think that put it in here. Hold on. I think that we'll go on and move this out of the way. I think that's the way they'll lean. The only concern is, like I said, is because it's so thin with the UK bank holiday, I don't think it'll impact the SPOOs as much as it certainly has done the FX markets. You've just seen it in the action. You're just not, you're not getting that two-way flow at all. I mean, obviously the euro's weak, but when you hit certain levels, you get a bounce, but it just doesn't, there doesn't seem to be much of anything there. And even when they're trying to push it lower, same thing. If you've read the tape for any real length of time, you can tell when there's just no liquidity there. So not really a whole lot going there. Probably trying to pick ourselves up a little bit here. It is a little bit of a key area here overall in the euro dollar on the 30-minute. Hang on, let me just look at something real quick in case y'all are trading it. Hold on. Yeah, this 1127 is key right in here. We got 1116 at your backside, so if anyone's trying to cover, you could actually, wouldn't be a bad idea to cover. 1135 was also, a level, but this 1127 here is pretty nice. You got 1116 at your backside, so probably not a bad idea if you wanted to go on and cover in here and in some of this euro dollar. But once again, that's the problem here is that you just don't have the liquidity, and it's basically been like a slow death burn. I do see here that Joe Wiesenthal saying boon yields are at the high of the day, and there are some concerns with the boons, and I don't follow the boons, but I know that there's some key levels that they're looking at, and also, even though they haven't resolved anything on Greece, basically the news is coming out that as this news comes out a little bit more favorable to a resolution in Greece, one moment, let me take a look at something real quick. Hang on one second. In just a moment. Just got a DM I have to answer. Take care real quick. Hang on a moment. Sorry about that. Okay, well anyway, let's go and get back to this. Yeah, I know it's on the spoos. Jan was saying it's on the spoos, or do I have to restart? No, Jan, you don't have to restart. I actually do have it on the spoos. As I was saying is, and just so we'll clarify, from today until Thursday, I'm going to have to be broadcasting for the next 3 hours. So I've got the regular European crossover webinar, but I also have to go and do the morning edge. So what I was trying to do is trying to avoid redundancy. So what I'm doing is, first we're just going to cover the spoos. We'll look at the 4 hour and the 30-minute. We'll look at the week ahead. We'll look at some key reports that might be impacting the spoos. We'll see if we can go over the Reuters news feed. And then we'll take a break, and then we'll do the crude oil, the 2 hour and 30-minute. Also look at the week ahead and gold. But what I'm stating is if something's impacting here in the currencies, I just want to go and let people know. But we're not gonna be covering currencies in this first hour at all during the week, unless something really unbelievable blows up and happens. Because once again, to avoid redundancy, because then the people who come in for the morning edge, then they're asking, well, what's up with the currencies? That's what I tuned in for. And then then y'all are like, we already saw currencies. I don't want to see any more of that stuff. So just for now through Thursday, we're pretty much not going to touch currencies unless I see us coming into a key level, and that's what I was referencing here in the euro dollar. If it was me, I'd probably actually been getting long there at that 27, 28. Problem is, and I did that earlier today on the way down, is that you're just not seeing the two-way action at all here on the currency because that UK bank holiday. I mean, liquidity is just basically nothing. So I actually had to add more on the way down and dance in and out, backwards and forwards and upside down. And I was really fortunate to get away with essentially a scratch. I think I lost like a pip or two. So I feel remarkable. I was kind of ticked up. You know, I really went when I woke up. I saw them at 12.18 and the euro, and I thought, wow, this is just a great place to sell them. And then, but I was doing some maintenance work, and I said, let me go and restart my computer because I want to make sure that I have no issues. By the time I got everything going and had a cup of coffee, I'll be doggone if the euro wasn't already into the 1180s. So then, you know, I picked some up around the 1170, and then I danced in and out, backwards and forwards, picked some up in the 50s, and at the end of the day, I guess I feel pretty good because I ended up essentially with a scratch. I think I lost a pip or two, so I was lucky to not get my rear end handed to me. But once again, that's because that illiquidity based on the UK bank holiday has really, you know, just killed it. Like we're here at 34 on the euro, but we're just not seeing as good two-way action, so I'd stay out of it. If it was a normal day, I'd be buying it right there. But anyway, let's go and get back to the spoos. So once again, I don't see any reason, although last week was different. We all want to know about last week and how we started out. And then within the first half hour, I tweeted out that we had a hangman on the 30-minute chart. We'll see if we can find this sucker back here. Let's see. There you go. There was a hangman right there. So let's blow this up. And I tweeted this out right in the first half hour. Actually, before the first half hour, I sent out a DM to a couple of folks. Said, "Hey, look, we're forming a hangman." And then about 10 minutes after 9, I shared it out to everybody. I said, "Hey, we have a hangman on the 30-minute, and the first 10 minutes of the next half hour don't look too good either." And of course, then we went and rolled down. And, you know, the rest is history. So, but that being said, I want to scoot this up a little bit. I really don't see anything, you know, in light of the last week's exception. I really don't see anything changing here in the spoos. I got to think that the only problem is that we got the UK bank holiday, but I don't think it'll impact it as much. So I got to think coming into the, especially we're into the first days of May. I got to think that we're going to see him on the bid. We might pull it a little bit in this area, but I think that worst case would have to be this 2102-ish, and then from there I think we should go on in. I don't know if we'll blow up here past 1475, but we'll definitely be up here in the, I would think, in the 2110s, and we might bump our head up against here. Anything's possible, but we're definitely breaking this trend line here, so that's going to be construed as positive. So, but let's, like I said, that's what we have here. I'm not, you know, later on in the week, we're actually expecting, let me go and move some stuff over here. We're going to take a look at some other stuff too. Hang on. Give me just a moment. I'm trying. I was going to share some bank research, and I've got that Microsoft Word. It's messing up my PDFs. It wants to take over them and do them. I really didn't want it to do that, but I didn't want to restart my computer because even though I shut off the Microsoft Word, not the Word, but the Outlook, it must be in the background. It still wants to take over the PDFs. Well, anyway, it is what it is. I wasn't about to restart my computer all over again, so it would kick it out. So I don't think I'll be using that Outlook because I want to start sharing when I get some of the bank research that I do get. So, and it's so much cleaner when I look at it on just a regular PDF or web browser. And for some reason, I don't know, they just started it this morning. And all of a sudden, Outlook wants to open up when I try to open up the bank research, it wants to put it in Outlook, and it just kind of jacks up the preview. But anyway, that being said, so we're looking at, you know, as we come on, you know, the ideas, and one of the things that I was looking at was the week ahead because we're focusing mainly on SPOOs. So it says the near stagnation in the first quarter GDP was a lot weaker than what we had been expecting. And what I'm trying to do is, because it's a slow day, I kind of want to start out the week as kind of like our strategy session on what we're looking at. So it says the near stagnation in the first quarter GDP was a lot weaker than we've been expecting, but it doesn't change our upbeat view that the underlying economic recovery and labor market conditions are strengthening. As the weather turns to more seasonal norms, we anticipate a big rebound in consumption growth. The slump in mining investment will remain a drag in the second quarter, blah, blah, blah. Okay, so one of the things that was kind of key said elsewhere, the acceleration in wage growth suggests the recent rumors of the demise of the Phillips curve have been greatly exaggerated. For all the talk of the unemployment rate not being an accurate gauge of labor market slack and pent-up wage deflation, wage growth is almost exactly where we would expect it to be, given that the unemployment rate is down to 5.5%. And usually it starts off by hitting the highlights. So it says this week we expect to learn that the non-farm payroll employment increased by a solid 230K, which would go a long way towards erasing the fears of slowdown following the unexpected week 126K increase in March. Otherwise, following the conclusion of the West Coast port dispute in February, we anticipate a big rebound in imports in March, resulting in sharp deterioration of the monthly trade deficit. So let's go on and get scooting over here. Let's see. So they're looking for wage growth to go on and be picking up. And I think that at this point now, I think that things are going to be viewed as favorable. I think we're going to start to turn where favorable news in the economy is going to be favorable news in the SPOOs overall. Now, one of the concerns that we do have in the very short run is the deterioration in the boons, and that's going to go on and cause some sense of an impact. I was reading some other stuff I was going to share, but like I said, doggone Outlook's over here trying to take over all the PDFs when I open them up. But as this boom starts to break down, technically, this could cause an issue with the European equities, which in some ways is going to also impact our 10 years too. And we're already starting to go on and see this as the 10-year continues to weaken further and further. And let me just pull that up real quick for you. And like I said, on Mondays, especially on a day like today, it's going to be more of a strategy session as we look into the week ahead. This is the way I trade because, like I said, I trade primarily technicals, but I always like to have, an idea. I kind of come in. This helps me to buy markets when the bottom's falling apart or whatever. If I have a general premise on how I believe the market's going to go and go. Hoping my voice will hold out. I'm pretty much over the cold, but my throat is still a little bit sore, so we'll be taking some breaks because I got to go for 3 hours every day for the next 4 days. So that's going to be a little bit tough here. So let's go in and pull this out to a 4-hour, and you can see that this 10-year note really looks like it's done a little bit of damage here. We've taken out this area here. Now, this is one of the concerns I'm going to have. And let me go on and right in here. It's going to be 2806. I think that we'll work higher in the SPOOs overall, but I think if I was you, I'd have 1 foot, like they say, when you go for the base, so 1 foot, you have one hand on second base, but you got the other hand on first base, and that's exactly, I think, how you better be treating the SPOOs overall. I think that the upside is going to be capped, and I think that these interest rates are what's going to go on and cap it. And what's leading the charge is the boons. So you're going to have to go on and be aware of that. Now, let's go and take a look at where we're at here. Well, it looks like we might be close to support 2716, so hang on one moment. This is going to go on and impact it, and why you want to go on and be aware of this overall. Let's see. I think it's going to be a little bit of herky jerky morning for a lot of reasons. I just wouldn't be pressing the accelerator at all in the SPOOs. I'd be looking for areas to go in and get out on the rally. Although we should find some support here in the 10-year, but you're going to have to keep an eye on the Boone. Right in here. Let's actually come into some nice little support right in there. See that? And let's go and move this back out. Yeah, some good, decent support in here. Hang on. Right there. That's going to be kind of interesting in a way. But you're going to have to be cognizant of that. I think that, you know, we're coming apart in these notes. And I think that that's going to go on and work as a drag on the potential that the SPOOs can go on and run up. Now, I'm not saying that we can't, because it's going to be, you know, put new money to work day on Mondays. And on top of that, it's the first Monday of the new month. So we might have a little extra giddy up in the step with the SPOOs. But you're going to have to be cognizant of what's going on here in this 10-year note. And let me go and move this out of the way. Doggone it. Swear. Yeah, just a moment. Let me get back to the notes here. Here we go. So looks like we're starting to get some wage growth inflation, which is actually what we need. Although once again, the problem is that's gonna be good for the economy. I mean, but it's one of the things that I saw that interest rate arbitrage shared, and it looks like these 10-year notes are really going to have to remain under pressure. So it says last week we also brought the news of a clear pickup in wage growth in this first quarter employment cost index. The annual growth rate of the ECI measured of private wages accelerated to a 6-year high of 2.7% year over year. That acceleration obviously contrasts with the complete lack of any pickup in the growth rate of the average hourly earnings. But historically, the Fed has put more weight on the ECI measure since it makes adjustments for the change mix of jobs in the economy. Up to now, there's been no acceleration in core price inflation either, with core PCE inflation still at only 1.3 in March, well below the Fed's 2% target. That means with the headline price inflation close to zero, workers have seen a sizable boost to real wages, with productivity still stagnant. However, real wages won't continue to rise. Most likely the outcome is the core price inflation will accelerate this later this year. Otherwise, that acceleration in wage growth suggests the recent rumors of the demise. You know, we already saw that part. So it says services is still driving the economic growth, and we're trying to get an overview of what we're looking at for the week ahead for trading these SPOOs, because we're up here at pretty key levels. I don't believe that we're going to have enough to get too much further from here. So it says while the ISM non-manufacturing index probably fell further in April, it still points to a pickup in GDP growth in the second quarter. The ongoing weakness of the core retail sales and equivalent regional surveys, such as those produced by Dallas and Richmond, suggests that the non-manufacturing index fell slightly in April. Accordingly, we've penciled in a small fade in the index to around 55 from 56.5 in March. Nonetheless, we would still leave it a relatively high level. Indeed, at that high level, we would still be consistent with the annual GDP growth, remaining around 3%. Looking ahead, we wouldn't be surprised if the index picked up over the next few months. The services sector is less vulnerable to the effects of a stronger dollar than the manufacturing sector. Well, that makes sense. And it should be boosted by a rebound in consumption growth. Now, once again, going back to the NFP to close out the week here. I don't even know how my voice is going to make it all the way till 8 o'clock. We don't expect the unexpectedly weak 126K in non-farm in March as a deterioration in labor market conditions, and they're expecting 230K. So the 126K increase in March was full 2 standard deviations below the 260 estimate from our model, and they don't expect a deviation that strong from their model again. So it says also another key thing was initial jobless claims have remained well below the 300K, and the ISM non-manufacturing employment index is a level that historically has been consistent with monthly gains in services payrolls of close to 250,000. So you got to be careful with this. Let me go and get rid of this. You're going to have to go in and be careful with this NFP, and the concern is if we do see this rebound, that's going to once again put the onus that they could take action, the Fed. Now, I don't think the Fed is going to take action sooner, but it's what how the market will choose to go in and price it. And you have to be, you know, sound like a broken record, but you have to be cognizant of that. So once again, here we are here on the SPOOs. I think that, you know, whatever you get on Monday, today, on put new money to work Monday, and also the beginning of the week, I think you have to go in and be very, very careful with it. I'm not sure that we're going to get a whole lot beyond that. So my guess is if you're the sell zone in here that I'd be looking to take profits is right in here as we come up to this 21.11 and a quarter, 3/4 to 14.75. I'm not saying we can't go up a little bit higher, but I would think that we're going to see some pretty good action in right in that area here. We'll go and jump into the 30-minute, and then we're going to take a nice break. This is where I would expect to see some action right in here. We'll go and pencil this in right here. Right there. I expect if you can go on and get, you know, I expect us to be on the bid with the put new money to work Monday and beginning of the week Monday. I mean, beginning of the month Monday. But like I said, I think we should see, you're going to go on and see some good action in here from 11 3/4 to 14.75. I would definitely myself would be exiting, although I'm not going to be doing anything with the SPOOs, especially on a day like today. I already went in with FX, and there's just not a whole lot happening. You can see it. You're not, you know, you're getting that death spiral lower, but you're not getting any two-way action, and then it eventually it works a little bit lower, but it just sits there for a long time. It tries to go up, it tries to go down, it can't do neither, and then eventually just kind of goes along with what's been the current move. It's just not good at two-way action. I don't like being exposed in that kind of situation. I've done quite well recently, you know, just simply day trading. So I don't want to be stuck in this kind of, you know, stuck with that pair. Although when it comes to euro, I'd rather be a seller overall. But here in the SPOOs, I would be very careful in here, and you're gonna have to keep an eye on those boons. I saw Joe Wiesenthal noted boons on the highs of the day, and so that's gonna weigh on it. So gonna have to be worried about that. So let's go in and take a break. It's already right at the bottom of the hour, so we'll go and take a nice little break here. So hang on a moment.